So welcome back. This is going to be my daily forecast for November 25th, Wednesday, 2020, of the commodities market. And we'll start by looking at the US dollar index. And as you can see, we have broken down a bit today, but we found, again, support at the same area, around 92.15, 92.10. And at this point, I think that we are going to see a little bit of pullback towards the 50-moving average. And that's why I've been warning people that are basically trading the gold and so on, that we could see a pullback in the US dollar index, and that could pressure the gold market further down below the 1800 level. But I thought that many aspects of the gold trade were looking very promising. And if we don't rally in gold, we'll probably have a little bit of a pullback and get some profit there before we go lower, if we go lower. But if we rally from here, the 50-moving average is at 93.23, then we'll target 94.27, and then probably all the way up towards the 200-moving average, and that is highly likely. We haven't been close to the 200-moving average since all the way back in July. So, but a rally towards the 50, that is quite possible at this point. So we have the oil market, and this was a very, how do you can say it, surprising. We broke the previous highs here, basically smashed the previous highs and went way above the 43.77 level. And at this point, we are going to target 45, and probably will run into major resistance at the 47.5 or in that area. But I do not think that we're going to stay here. We are getting overbought. We're at 68. Technical indicators are still bullish, but when we get to this area around here, we'll find significant resistance and we'll fall back towards the 50-moving average. So I'm still not buying it in this market. It is just too risky at this point. If we get to 47.5, I will definitely start thinking about selling this all the way down to the 50-moving average. So I'll have a stop loss around 50, and then target the $40 range. So that is my strategy for the oil market at this point. It's basically buying it at the highest price level possible. So we'll start by looking at natural gas. We can see that we have rallied all the way up to the 50-moving average. We're still trading underneath the 50-moving average. We need to cross the 50-moving average, also cross this the top of this candlestick here, in order to confirm that we are going to go higher in this market. I would not be surprised if we did that, mainly due to the fact that we are entering the cold winter months, and usually we have a massive spike in the price of natural gas. And you can also see that the technical indicators for natural gas are turning around. But still, I don't like when this is under the 50-moving average. I would never ever enter this market, even though all of these indicators were basically screaming bullishness. I still know that when you're trading underneath the 50-moving average, it is so quickly that you basically can break down to the downside again. So a break of the 50 and trading above the 50-moving average, free of the 50-moving average, that is basically what I'm looking for. So when we do that, I will target these highs first, 3.34, 3.39, and we'll have a stop loss around these lows here at 2.6. So that is my idea for natural gas. So let's look at copper. So I entered a copper trade today. I have entered that trade several times the last 2 weeks, because I didn't think copper would get this high. But it's at this point more promising, that trade. What I expect is a move similar to this. So a week of a gradual decline towards the 50-moving average from 3.3 probably down to 3.1 or 3.08. That is what I'm looking for. We are overbought at this, almost overbought. Technical indicators are fairly bullish at this point, but what I'm looking for is what I was looking for when I traded this is that I shorted around this area. We had a stop loss above and then take profit at around the 50 moving average. So that is the trade that I made, and hopefully this time it will be successful. I'm looking for something similar to this. So let's see the gold market, because this is also the market that we entered today. And we have fallen to the 1800 level, which I've been waiting for since basically we started trading underneath the 50 moving average for several months now. Gold has been trading in these steps. So broke down significantly in August, traded sideways, broke it down again, down again, rallied here, and then broke down towards the 1800 level. So at this point, I think that we are going to see a little bit of pullback. We'll probably not rally all the way to the 50 moving average. And the reason why I say that is because I think that the US dollar index is going to appreciate, and that will, of course, pressure this market further down. But the reason why I entered this market is because if you look at the hourly chart, it is significantly oversold, like significantly oversold. And when it gets this oversold, we may see a rally up towards the 1850 level, so around this area here. So that would be a fairly good trade. If we ran into major resistance here, then of course this would be profit, and we could basically get out of the market here and then see whether or not it will test the 1800 level again. And if not, if we basically rally all the way up towards the 50 moving average in the 1 hour chart, the daily chart, that is around 1900. And of course, that is even better. So it's at this point a win-win if we rally. But if we break below the 200 moving average, then watch out below. Then we'll target 750 and probably also 1700. I don't think that is going to happen. We are too overstretched at this point. We actually been in a downtrend for months now and been selling and selling off. At this point, we are at 32, almost oversold, and technical indicators are looking like they are going to turn around in a day or two. So yes, we just have to see what happens here. But it is, I think, going to be a fairly good trade. So we look at silver. We can see that we have broken down, not as much as in gold. We went all the way down to 22.9, but we are targeting 20. So silver has a long way to go in order for it to be, considered being a very safe and good investment. So until we get to the $20 range, there's no reason to enter this either with a sell or a buy. So I'm just waiting, like I waited for gold to get all the way down to 1800. I'm waiting for silver to get down to $20 range. So we look at platinum. We can see that we have rallied, but we did not break the previous highs. We got to the previous highs and pulled back a little bit. But at this point, it is very choppy. It is a bullish candle, but we need to break these highs in order to go higher. And then we'll go targeting 978 and then to all the way to 1002. I don't like this market whatsoever. If we pull back towards the 50 moving average, then yes, I would consider basically buying into this market. If we pull all the way back to the 200 moving average, then yes, of course, I would buy into that market. But at this current point, I'm just not interested either in selling or buying this in this market. So just stay away from it. So if we look at Pallium, we can see that we have pierced the 50 moving average, and this is a really good sign. We did the same thing yesterday, but today we again pierced it, and this is a very bullish candlestick. Technical indicator for this commodity is still very well. They're not saying anything. They're basically flat. So until they turn around and show sign of life, and then we and also get a candlestick that basically break these tops, and then we just have to wait. A break below here opens the door to 2.270, and I'm just basically buying this towards 2.5 to 1. So wait until it rallies a little bit more. So aluminium. We broke down yesterday, rallied again today, and I think this is just a false rally. I don't think this is going to go higher. I think this is going to go lower. We are overbought at this point, so it is just a matter of just waiting to get towards the 50-moving average as far as possible. I don't think we're going further than 1.887 because we'll find major support there, and also the 50-moving average will also travel this way. So wait until it falls towards this area. If it has a pullback, then it's a possible buy. A break below the 50, that is highly unlikely because we'll run into major support already here. So this is pullback and basically buy the pullback. So let's look at nickel. And as you can see, we have rallied and we got to nearly to these very highs here. But still, this is a market similar to the other ones. We need a pullback towards the 50-moving average in order to enter this market. A buy here is just crazy, and making a short here is also fairly risky as well. So a pullback towards the 50, that is what you should be looking for in order to buy into this market. So as well, just stay away from this. So let's look at sugar. Well, we started again the fall towards the 50-moving average, and now it's starting to look more interesting. Technical indicators for sugar are turning around. This means that we are going to probably go all the way down 0.1448, and that will basically be our entry for this market. Well, stop loss underneath and target these very highs of 0.1561. So it's a wait towards the 50-moving average around this area here in order to enter. And of course, we need a little bit of pullback in order to indicate that we are going to go higher. And we look at cotton. We broke down quite significantly, rallied again, but I think this is just a false rally. This is a market that is going to go lower. We are fairly overstretched, and a pullback towards, or it will be a choppy pullback towards the 50-moving average around 0.7. That is basically what we are looking for at this point. That would coincide with these previous highs, and yes, that's a buying opportunity if we get to this area and just at the 50-moving average as well. So a short stop loss around 0.68 and a target of 0.74. Technical indicators for this are starting to look really dreadful, and this candlestick also broke down quite significantly today and is expected to go further. So look at cocoa. This is a market that is very interesting. The people that basically started shorting here are going to make a massive, expecting massive profit. If we look at the Fibonacci retracement, we can see that it is highly likely that we'll fall towards the first Fibonacci retracement. That is 2.592. The next one is here at 2.519, and that is most likely where we'll end up. We will have the 50-moving average traveling this way, and we'll have a fall towards this area here. So around 2.55, that is where you can enter this market for a buy for the upside. A break below that, we'll also have the 200-moving average underneath. So yeah, we'll have to see. But a short, if we get a negative candlestick here the next trading day, then it's definitely a short towards this area. So last but not least, it's wheat. So this was one of our trades and it worked out quite nicely. We ran into resistance here at these previous highs, and in order for us to get higher from here, we need to break these highs. So a pullback is probably in the short run expected towards these previous highs around 500 or 600, and then if we rally from there, then we are going to these all-time highs. So a plausible buying again at around 600, that is possible. Technical indicators for this are looking really good. So people that held on to their trades, they should not be that scared, but because these indicators are looking really nice. But a pullback towards the 600 gives another opportunity to buy into this market and into the highs of 637. So hope you find this helpful. You're welcome to write to me if you have any questions about this, and good luck and thank you very much.